Self-review thread. A professional accountant issues an assurance report on the effectiveness of operation of financial system after implementation of system. Professional accounts having prepared the original data used to generate records, that is subject matters of the assurance engagement. So to self-review, first the professional accountant issuing an assurance report, okay, on the effectiveness of operation, okay, that is a effective operation or financial system. There's a financial system is an NBFC, some kind of banks, and after implementation of the system, what happens after implementation itself? You can't say that it's totally effective. That's a contradiction. Even doing assurance statements without finding faults, you can take some trial period and understand what's the problem happening in the system. After that, you should use this review system. Second point, professional accounts having prepared original data used to generate records that are subject matter of the assurance engagement. Whenever you provide a report, that is all based on the original record, not on the copy or photocopy. First point. Without that you are giving, it's not so ensuring anything. That's what. So you always give a report upon the original data, not on the generated records. That is, we go to seeing an audit, you see the bank statement, actual bank statement, then after you proceed audit, not the PDF format or Excel format given by the client. That bank report is signed by the bank report, the original records, not the photocopies. That's the thing. Advocacy, that it's a professional accountant promotes the interest of shares in a client. The profession, that is previously said, a professional accountant may have a client who has a product, he may promote that. If it is problem, it is a problem. The professional acting on advocacy on behalf of the client on in litigation dispute with third parties. Not only that, the CA can also be a lawyer. When he become a lawyer, he may have as a cases as a lawyer. You can practice on CA. You can practice. When you have an advocate and you use advocacy and help the clients, at the same time you also do the financial division, there may be a problem lies on the ethical board that may create. Professional account lobbying in favor of registration on behalf of the client. Sometimes you may lobby for some favors, like you want some expenses or some money required, some kind of things. So familiarity things. Professional account having close intimate relationship, the family members who is a director officer of the client, your parents, teachers, most relative that may do. Director officer of the client, the employee in position to exert significant influence over the subject matter of engagement, having a recently served as an engagement partner. The audit team members having a long associate with the audit clients. Usually a familiarity concept comes when you start a long relationship with them. That has been said here. The intimidation threats. The professional accountants being threatened with dismissal form from the client engagement or the firms because of the disagreement about the professional matter. Okay. There is a dispute, and the professional accountant being threatened with the dismissal of the client of engagement. Probably like you have a client and you ask a document. After reviewing the document, you may found some misappropriations or misleading expenses, not proper income is not being properly accounted, there is no disclosure of the income, and you ask the client is not giving proper response. You say, okay, I can't do the audit, please go. So he may threat you, you have wasted my time, so I will make something bad things to you. It's a become professional accountants being pressured to agree with the judgment of a client because the clients have more experience on the matter of questions. Sometimes a chartered accountant can be a businessman, and you are a chartered accountant audit for him, and you may say a matter of opinion based on material opinion that which is a practical approach and a safeguard approach, but the auditors who is a businessman who may give a different approach and say that Matt he can do that way, and he may intimate that I have more experience, so follow this way. Professional accountants being informed that planned promotions will not occur unless the accountant agrees with the inappropriate accounting treatment. When you are employed in some places, the employer may ask you to do some works on that works may there may comes up with a point it will affect your promotion or increment, that may intimidate you. That's also a problem. Professional accounts having accept a significant gift from a client and being threatened that accepting of gift will be made public. Usually, the auditors usually get huge gifts from the clients because of their success, and you may got an gift that is not that is not public or knowledge or something which your family may feel threatened, and the client may intimidate you if you don't do the work properly. We may do something, such kind of things may happen, so that need to be considered. The following examples are the facts circumstances which within each of the categories that may create threat the professional accountant with underlying profession. So threats or example circumstances in each categories may create threats for the profession. Threats, we won't say threats. Okay. The profession of holding financial interest and receive loan or a guarantee from the employing organization. That is, I have said already, when you are a self-interested may come, you may have got loan, they gave you guarantee, or you have a financial interest company, you have bought shares. If you don't properly disclose this information or don't sign the audit report, they may ask the money back, or your share price may reduce, they may withdraw the guarantee. Such kind of problems come. Professional accountant participate in incentive compensation agreement offered by the employing organization. Yeah, if you sign this audit report, we will provide you incentive, or else we won't provide you incentive. Money matters. Money comes into process. As an employer, he may ask you to sign some reports, and that may affect your financial situation. The incentive compensation agreement may be signed, so that will affect. That's a thing. Professional accountants having access to corporate assets for personal use. The company may offer you cars, vehicles, even go to air flights, everything. Many facilities they have used, they help you to use it for personal use. But if you don't sign this part or agree with it, provide certificate regarding it, they will take it out. The professional accounts being offered gift or a special treatment from the supplier of the employing organization. That's the client. Every time you go to some fancy store or a fancy supermarket or some kind of luxury thing, hotels, spa, as you are auditor of that, they may provide a special treatment, special discount which nobody else get, and that may intimidate you to sign the report. Self-reviewing check. The professional accountant determine appropriate accounting treatment for a business company after performing the feasibility of study supporting the purchase of the decision. The professional accountant determines appropriate accounting treatment for business combination after performing the feasibility study supporting the purchase decision. Thing is, determine what he is doing, determining appropriate accounting treatment. So you are finding an appropriate accounting treatment for the business combination after performing the feasibility study supporting the purchase decision. Before you have given a decision, and after giving the decision, you are finding an appropriate accounting treatment to support the decision. What is your duty to do? First, you should research about it, find a conclusion, and how it can be accounted. You determine everything. Then after you can tell you can do this, without saying that they have made some purchase, they have made some accounting process, something else. No, something. After that, you are back working on it to support your decision. Such kind of a self-review threat. You don't understand properly. If you do fast answer, this is a problem. Advocacy threat. The professional account having the opportunity to manipulate information in the prospectus of an order to obtain favorable financials. Nowadays you can see in the financials, you can see recently income tax has released the report stating that on financial 2023-24 we have the 6 crores income tax return, but 2013-14 or something we have only 3 crores return. Within the 10 years we have increased twice the amount of income tax return filed. Actually it is manipulation. as you see the population, as how much the population increase, what is the age of people has increased, and how many people are been earning more. Are you given the actual numbers? The actual numbers may not be 6 crores, it will be more than 15 crores, 30 crores people. But some kind of that maybe the information which is being said to show off. So such a way in a company you can technically you can give some data which may increase the view of the prospectus in the prospectus, that may increase the investment. Such a way you can, so if you manipulate this prospect in a way so it is legal but you manipulating it so you get some financial benefit out of it, you can do it. If you do it, that is an advanced secret, because of you saying this has been there and people are going to buy it, when that's a problem arise out of it, they're going to catch your neck. Familiarity threat is a professional accountant being responsible for financial reporting of the employing organization when immediately close family member employed by the organization make decision that affects the financial reporting of the organization. So being responsible for the financial reporting of the employing organization when immediately close family member employed by the organization makes decision that affects the financial reporting of the organization. You may have a policy of financial reporting that you have when organization employs someone, for example a father-in-law, a brother-in-law, whoever is newly employed, and he makes some decision and that decision is affecting the financials, and you're going to report that thing. Only because of is your relative, you can't make that reporting in that way. So because of his bad decisions of the financial, this may show that company's process is not working properly, so you need to suppress that information that may have. That is the familiarity thing. The professional account being a long associate with the individual influencing decision. Sometimes you may be the familiarity that you as a auditor, everything is asked to you and you saying that what happens, you said something to invest and some problems in a listed company and they ask you and you said the answer, they invest it, but unfortunately it didn't work out. But if that being said in the report, this may cause some what is the basis of your opinion, what is the research you made, how do you come up with this idea. If they ask, you may be like what, and your name would be splashed. So what do, you manipulate the accounts. That's a problem of the threat. Intimidation threat. A professional account is immediately a close family members facing a threat or dismissal of replacement over the disagreement about application of accounting principle. As some person, you in a company you're auditing, you asked for a report and they have given a report that is not exactly correct, and you dismiss the information. Rather you take auditor, you go to another professional accountant, you dismiss yourself from the account from the audit, and they may intimidate you that you are doing is wrong. So way in which financial information to be reported, you may say to be reported in the Ind AS form, but they are saying Ind AS form may reduce their financials. They may show the stocks may be overvalued, so you don't go to undervalue, so we don't need to pay more tax. Such kind of things may happen. So this to be, it is an intimidation. The individual attempt to influence the decision making process of the professional accountant, or example regarding awarding contract or publication of the accounting principle. So that's the same thing. They may threat you, they will provide you dismiss things. If you don't do, we will do that thing. You have bought some gift, you will release it to public. Such kind of intimidation threats are there. The specific circumstances give rise to unique threats and complaints with one or more of the fundamental principles. Every situation may come with it. So unique threats cannot be categorized in either professional or business relationship. A professional accountant in the public practice should always be allowed such circumstantial threats. So as a professional accountant, you will always be alert and you can't fall into that traps. So that has been said. Second, evolution of threats. So we have seen what are the threats we have seen. So actually what is a threat? So now we're going to see how to address a threat, identify a threat, evaluate the threat. So evaluation of threat. These conditions of policy procedure described the above might be impact of evaluation or whether the threat of complaints will be fundamental principle to be acceptable level. Acceptable is a level at a professional accountant using a reasonable information. Third party would like to conclude that accountant complaints with fundamental principle. Unacceptable, you can reduce the risk to acceptable low level. Likewise, like um, so the professional accountant using a reasonable and informed third person test would conclude. So whatever you say carefully, and it should be reasonable, and this information should come from the third party, not from yourself. Informed third party test would be concluded. Always you say this is the information, it's reasonable, and it is from third party. The words what you are saying, it's not from you. So the third party test would be concluding the accounting complaints. This company has done this. This is the evidence we have. We are following this. Like a third party, we have a reference over it. We can reduce the risk to acceptable low level. Reasonable and informed third party. The reasonable and informed third party test is considered as a professional accountant about whether such conclusion would be like to reached by another party. Such considerations are made by the perspective of a reasonable and informed third party who weigh all the relevant facts and conclude that accounts knows and could reasonably acceptable to know the time of conclusion or be made. What is the time of conclusion made? A reasonable and informed third party does not mean to be an accountant but would possess the relevant knowledge and experience to understand and evaluate the appropriateness of accountant conclusion in impartial manner. So when there is a problem, you take this to a third party who will be able to understand your solution. Who you do not be who has the relevant experience and relevant knowledge, and evaluate the approach situation. And with the situation, he comes up with a solution which doesn't affect you and the client. So doesn't through this he is not get responsible any threats or any party. So the reasonable informed third party, you can do this. Address threat. If a professional accountant determines that identifying threats to comply with the fundamental principles is not an acceptable level, accountant shall address the threat by eliminating them and reduce them to acceptable level. So if you're finding any threats to be found, you should reduce to acceptable low level. Accountants not acceptable level, so reduce whatever level you can reduce it. Eliminate the circumstances including interest of relationship and creating the threats. First you can eliminate. How? You don't buy the company shares, you don't get guarantee from that company, you don't ask loan from them. Now, if your father-in-law, mother-in-law working there, you don't take the audit, you eliminate the work. Don't get gifts from it, don't get favors from it, don't give any opinion over them, don't give any ideas, don't help them in anything. You are an accountant, they are a business firm, so be separate with them. First point. Second, applying safeguards where applicable, where available and capable being applied to reduce the threats to accepted low level. Unfortunately, you are going to be able to take you got loan, or you got family members got loan. Be distinct with it and be careful and reduce the risk. Don't be seen with them, reduce the relationship with them, so that they can't influence you to them. Such kind of idea creates circumstances because of this audit. Decline ending specific professional activity. If it is gone beyond your neck, just decline the engagement activity, resign from it, end it. So resigning and declining it is a major very good point when you cross that limit. Actions to eliminate threat. Depending on the fact and circumstances, the threat might be addressed by eliminating the circumstances creating a threat. The main problem of a threat is, if you get loan, don't get loan. If you get guarantee, don't get guarantee. If your family members are working there, don't talk and take the audit. They provide you something, say don't want, I don't need it, decline it. This is the first and main process you need to do. However, there are some circumstances in which threats can only be addressed by declining and ending the specific professional activities. Your wife may go to the jewelry, and when you say this is audited wife, they may provide huge amount of discounts. You got that gold and came out, and you say, I bought this gold. What is the best idea when going to audit? Just decline the audit and come out. Resign from the audit. That is the best way. When they give something, they are going to take 100 times more. So be careful. This is because of the circumstances that creates a threat that cannot be eliminated as safeguards or not capable of being applied to reduce the threat to acceptable level. So such situation may arise and may accrue, so you need to take action in respect to that. Safeguards. Safeguards are the action, individuals, and combination that the accountant takes that effectively reduce the risk to acceptable loan. So, what is the safeguard? The safeguard is an effective steps that to be taken to reduce the risk to acceptable low level. That is, safeguard is depending on the factors of use. So, sometimes of safeguard may different from some certain circumstances and certain facts are involved to safeguard user. Examples are given. Assigning additional time and qualifying person to required task when the engagement being accepted might address self-interest. In the case of self-interested, you have been involved financially, you have some so while you apply some additional person, don't go, you don't go, ask someone to go and they will help you, and they ask them to complete the audit. Then after and employ some additional employees, don't go, they will do the work or you will overview it, so you don't have problems. Having appropriate reviewer who was not a member of the team review the work performed to advise the necessary might address the self-review threat. In case of self-review, don't go within your partnership firm. Ask somebody, some other qualified auditor also to review your work and ask them to review your work and see some mistakes and find the mistakes. And after they review, you sign it. Don't sign it. So when someone check your audits and they review that and which who are not the member of your team, they will say openly to your face, and that will increase the quality of the work and you can reduce the risk. Using different partner and engagement teams in separate reporting lines for the provision of non-assurance services to assurance clients might address self-review advocacy of family threats. Using different partners and engagement teams with separate reporting lines for provision of non-assurance services. The two non-assurance service to assurance clients might address self-review and advocacy family. Not everywhere you need to go and do the audit. Sometimes you may send a person who is not in the engagement team and you don't need to report lines which are not. Sometimes you need to give non-assurance line, so don't give that assurance line, ask someone to report it. Involving another firm to perform or re-perform part of engagement might address self-review, advocacy, familiarity, intimation threats. If you are being affected by self-review, self-advocacy threats, self-interest, familiarity threats, and intimation threats, just don't go, ask someone to do the audit. Separate teams will deal the matters of a confidential nature, might address self-interest threat. If there being a self-interest threat, separate team, if you used it, it will be very good. That's a solution which is being given and it's a fabulous solution. First thing, you eliminate it, don't go and do it. Second thing, use someone to do it. For our self-review that just appoint some person who is out of your office and is another person who is not linked with a member of your team who is able to review your work. You can reduce the risk to acceptable level. That's it. Non-compliance with law and regulation, NOCLAR, non-CLAR. That's a very important section. The course of provision professional service to a client carrying out professional activities for the employer, the professional accountant may come across an instance of non-compliance with law and regulation. Or suspected non-compliance of law and regulation committed by the client or employer by the charge of governance, management, employee of the employer. The non-compliance with law and regulation comprises of the acts or omission of the commission, intention, unintention, which is contrary to the prevailing laws and regulations. Committed by client, professional accountant, employing organization, those charged with governance are client, management, or the employing organization, or individuals working for under the direction of client employing organization. Whenever NOCLAR under the revised code of ethics does not address personal misconduct unrelated to the business activity of the client employing organization, non-compliance of the party other than listed out in defined in NOCR. So the non-compliance, sometimes your client, your professional accountant, your employer, those who charge with governance, managing directors, a company may do some activities that is illegal or non-compliance with laws and regulation. That may be omission, commission error, intention, unintentional error. So some kind of error may be due. These are the examples that we covered in the non-compliance of laws and regulations: fraud, corruption, bribery, money laundering, terrorism funding, and process of crimes. Security, marketing and trading. Securities, marketing and trading, banking, other financial services, products and services. data protection, environmental protection, public health and safety, tax and pension liability payments. So these are the examples. There are many laws and regulations, out of which these are the examples. If they are involving in it, the objective of not non-compliance of laws and regulation turned a blind eye to potential non-clients, not appropriate response of professional accountant. By placing renewed emphasis on the role of management and those charged with governance, address the matter. Further, it increases awareness and understanding among professional accountants their legal and regulatory responsibility to face non-SLR. So, important facts that NOCLR is given non-compliance of law and regulation during the course of providing service. Non-compliance of laws and regulation will be applicable if a professional accountant encounters or made aware of a non-compliance, a suspect of non-compliance, in the course of providing professional service to a client. He is not required to investigate, not responsible for ensuring complete compliance. He is not required to investigate or not responsible for ensuring complete compliance. Okay. This is a different point. It is not required to investigate. He is not required to investigate, not responsible for ensuring complete compliance. Okay. Exercise of law required. A professional accountant is expected to apply knowledge and expertise and exercise professional judgment. However, he is not expected to have a level of knowledge and laws and regulation greater than which is required to be undertake the engagement. Whenever an act constitutes non-compliance, is ultimate manner is to determine by court or other appropriate adjective body. If you come up with a point, there is something happening, that bad happening, you are not expert in that. You are not able. You were wrote to see financial, everything is properly fine. If that is in litigation, you file a report, you adverse report. Other than that, you are not expert in it. You should not go and you poke your fingers in where you don't know. Okay, certain matter expressly out of review. Matters that are clearly inconsequential or relation to the personal misconduct pertaining to the business activities of the client is not covered. Okay. Disclosure in contrary with the laws are not required. As per IESBA code, disclosure of a matter to an appropriate authority would be preclude if doing so would be contrary to law or regulation. If you require to report such as per the IESBA code, and if you preclude that it is against your law or regulations, you don't need to conclude, you don't need to report something. It's a free chance, you don't need to do something. If they are doing, don't go and engage yourself with them. Just to come out. It's not your duty to report everything. And it's very important point. This is a very important point.